Welcome to another real-time trade. In this video, I'll discuss several ways to manage the trade to empower you to design a trade management model that suits your unique mental wiring. This is the stuff of the real game. Now let's join the trade in progress. Hey guys, Czar here. Good morning to you. Hope all is well. Trust you're having a good morning so far. It is 9:28. That means the market opens in about 2 minutes. New York session, of course. It's 9:28 Eastern Standard Time, also known as the New York time zone. Looking at a trading grid right now. This is the NASDAQ. We'll look at the S&P and the Dow as well. Daily chart up in the top left, 30-minute chart in the bottom left, and a 1, 2, or 3-minute chart on the right-hand side. This is 1 minute. I usually use the 1 minute for the first hour of the session in the pre-market here. And then I might move up to the 2 or the 3-minute chart depending on how quiet the market gets. This will be a quieter week. It is the Thanksgiving week in the US, and trading volumes get pretty thin. A lot of people take the entire week off actually, but certainly today, Wednesday, Thanksgiving is tomorrow. And then often people will take Friday off as well to make it a full long weekend. But we'll see here today. So this is the NASDAQ, guys. You can see we're in a range here on the 30-minute chart, having rallied strongly here, basically all or most of the European session. Of course, Europe continues till about 11:30 here today. And of course, we're only at about 9:30 now. Daily is an inside day. In other words, the high and the low are inside the high of the low of the prior day, which is yesterday. We are at a very key resistance zone here. You see that going back to July, I believe. Yeah, July 18th, 19th. Of this year, midsummer, and struggling to get beyond here. There's two zones there actually, and so we're watching that and keeping that in mind as we watch the dynamic here. The market's now open. So that's the NASDAQ. Let's take a look at the S&P on the same grid. There's the daily inside day as well. Actually, we broke yesterday's high, but we're inside of the Monday's high there. Also rallied most of the European session. Now we're getting a bit of a boost here on the open, and then we'll take a look at the Dow inside day there, looking a very similar picture, I should say here, tapping another zone and blowing through that zone here on the 30-minute chart. See that big run up here on the open. Let's take a look at the three sisters, shall we? Here we go. We got an expanding range here, exploding on the Dow. So we'll keep that in mind. We're watching this open, guys. I'll be cutting out dead air, sideways grinding action, non-teaching moments to keep this video nice and tight. But for now, we will watch and see. I'll put you on pause for now, guys, and I'll bring you back as this picture develops. All right, guys, we're back here watching this very interesting morning. Lots going on, and nothing going on at the same time. Let me show you the three sisters so you can tell. You see what I mean by that. NASDAQ over here on the left, in the S&P and the Dow, and you can see that we've been kind of grinding around the oscillating around the VWAP here, and then now we've just kind of had this nice rally, but not something that I would foresee and did not participate in. And now looking for a potential short here, guys. I mean, there was a very bearish move right here after this spike above on the Dow. We had something very similar on the S&P. See that there? Right into resistance and then down. I sent this to my group showing the range boundedness here, and then the NASDAQ also spiking into and beyond resistance, and again showing this to my group, the range boundedness here, and now moving out of that, of course, as you can see. But there has been nothing here in terms of 30-minute reasons to enter for me, and that's what I insist upon, certainly for zone breaks and zone reversals. And T-con trades, something similar has to be in place. And many of you will know what those things are. But now, guys, looking at that's the NASDAQ. Let's go back to the S&P. Let's go back to the Dow. The Dow in particular looks the most interesting to me here for a potential short. Reversal down, right? Sell stop here, guys. Sell stop right here. It is 10:42. We still have time here before the twilight zone. I'm going to place my stop above, right above there. I'll fix these markers in a moment and refine them a little bit, but that's the idea here, guys. Will be a trend continuation right now. Here we go. Sell stop. All right, guys, we're in. I just got tapped in there. Right there. You see that? The coin has been tossed. I'm going to fix these markers up, and I will bring you back, and we'll talk about this trade. Back in a bit. And target 1 has been hit, guys, and so the 1R all-or-nothing trader has left the game with full profitability. The 2R move stop to break even at 1R has moved their stop to break even because we've hit 1R. So they will either get a 2R or a break even and nothing in between. The 1.5 and 2R all-or-nothing trader is still sitting here waiting to see what happens. This is a zone reversal trend continuation trade, guys. It has a feel of both, right? So there's the zone, key zone, and tapping in and reversing. Well, we obviously spiked through it right on the very open. Of course, I don't enter trades during the first 10 minutes, as most of you know, and there was no structure there for entry at all. But then we had a more legitimate tapping of that zone later, so 2 candles later here, and then rejecting down. This spike up is this piece that you see here on the 1-minute chart, and then the rounding over and driving down. This became an impulse down, right? Rather aggressive impulse down. We had some news that came out at 10 o'clock, which was actually right about here. Didn't really do too much. We had one big candle here, as you can see. That's the 10 o'clock candle, but just kind of continued the impulse. It looked like that this was a kind of a prescient move on the news, that in anticipation of what would come out. But it was very much an impulse, right? A shift move. There was an impulse up and an equal impulse down, negating that entire first move. Basically double bottomed here, and then a nice pullback, kind of an orderly pullback, a little zigzag here, a nice little kind of a rally coming up here, deep retracement but not fully here, then beginning to round over, putting in some trend continuation style rejection wicks up here, and then a break of pivot. That wasn't enough for me because we were not below EMAs, and the EMAs were not a negative moving average configuration. We tried to make a new high, failed. We tried to make a new high, failed again, and then that subsequent break was good enough for me. We already had a zigzag here with a measured move there, right? 1, 2, right? Also A, B, C, if you like. People count these things differently. And then this kind of meandering sideways grind and then break down below. No guarantees this thing's going to go any lower. This is a very kind of a sloppy day with some fairly random behavior. But what's key to this, guys, is not only this key zone that was from yesterday, right, in the very aggressive rally into, and then for whatever reason the participants said no higher, you're going no further, and drove prices down. And we had earnings, of course, after the market closed there in New York. I said this was yesterday. Of course, it was Monday. Yesterday was Tuesday, and this was from Monday, but a very key zone. But even more key than that is what we see here on the daily chart. Now, of course, the daily overall is a very bullish picture, as you can see, but we had this resting day, inside day yesterday, which actually closed a bearish day, and then we had this penetration into extremely key resistance over here, going all the way back to September 14th and August 30th. So kind of a double zone there, if you like, and rejecting. So reasons to sell, daily reasons to sell. Just minding my alarms there. One of my alarms, pardon me. And then driving down. So that's the idea behind here, guys. So there's a trend continuation feel, zone reversal feel. So I will call this a zone reversal T-con trade. Worst case, we hit 1R on this thing. We'll see how it plays out from here. One trade today so far, 10:57. Well, we still have time. There might be another trade this afternoon. You never know. I will likely take a break during the twilight zone, but I'll bring you back here to see how this plays out. And there we have it, guys, pulled all the way back to the original stop. And so in terms of the models, guys, the 1R all-or-nothing trader, of course, had full profitability. The 1.5 and 2R all-or-nothing traders took a 1R charge, and the 2R move stop to break even at 1R was a break even. Was able to defend their position, so those two obviously paid off in terms of strategy. But this is another symptom, guys, of that low VIX environment, an unwillingness of the market to follow through on just about any move, whether it's a move up to continue or move down to continue, and so on. And I will tell you that I just sent this to my group that we just broke 13 on the VIX, down to 12.97. I think it hit 12.95 at one point. Let me just show this to you. I'll put you on pause for a second. There it is, guys. There's VIX. This is just a copy and paste. I slid it on top of the chart here so you could see it. This is the daily up here. You can see this long bearish move and hitting a new low today. This is the 30-minute chart going way back to September. This would have been October 23rd back here, for instance, just driving down. These are 30-minute candles. And then a 5-minute chart here on the right-hand side. You can see this consistent draining like a waterfall. And again, hitting, there's 12.99, but hit 12.95 earlier. Again, a new low, multi-month low, and more of the same. And so this is what I've been talking to my group about, is that when there's very little movement, volatility, it's more difficult to reach those more extreme targets, and why one should perhaps think about moving up on the time frames from say a 30-minute or a 1-minute chart to maybe a 1 hour and a 5-minute or a 10-minute chart for the refinement of entries and things of that nature. Maybe even consider swing trading, right? Maybe shooting for 1.5 hour or 1 hour instead of the 2, 3, or 4 hour, for instance. Now you can still get those, but it becomes much more challenging, not just from a functional standpoint, from a logistical standpoint, but from a mental game standpoint, trading psychology, to be able to withstand some of these ranges and the choppiness that can do so much damage to many traders. Again, VIX, anything under around 20 becomes much more difficult for most day traders. Under 16, 15, very difficult. Under 13, like just happened, many traders will blow their accounts, quite frankly, because they will try to do too much to squeeze water from a stone, and of course you can't do that. Thanks for being here today, guys. Appreciate you, appreciate your support, and we will talk to you soon. Have a great one, guys.